What is going on, you guys, and welcome back to the channel. My name is Brandon. If you're new here, if you're new to the stock market, be sure to subscribe. We post videos every week, and you can learn more about our investing academy. That'll be that first link down in the description below. But it's been a little while since I've posted a video on stocks to buy. I wanted to throw one up really quick and talk about today here some of my top dividend stocks. In fact, the top 5 dividend stocks. These are companies that I believe you can buy and just hold forever. And especially with the markets being as tricky as they are and kind of people are feeling a little bit iffy about them, one thing that we can almost always rely on, especially when we take a look at the companies today, is for these dividends to be paid out and to receive a nice stream of income into our portfolios, as we'll look at in a second. Hopefully what I'll display in this video by looking at the types of companies is just to see the quality of these dividends. When you look at the streaks, when you look at how long they've been paid out for, the payout ratio, just the overall, I guess, quality of a dividend. And I'm really hoping that I can display that for you today in today's video. If you enjoyed, give this one a thumbs up. But the first stock that I wanted to talk about was a company called Canadian Utilities. And this one does kind of fly under the radar. It's not all too known, but it should be. They currently yield a dividend. They have a 4.33% dividend, doing so with a 45% payout ratio. In other words, they're paying out 45% of their earnings. The company makes X amount of money in profits. They're taking 45% of that, less than half, let's call it half, and paying that out in dividends. So very, very sustainable. It's not like they're stretching too much. It's just half of their income. And Canadian Utilities, this is a company, this is the longest paying dividend company in Canada, okay? They're actually just a couple years away from being considered a dividend king. And we may be familiar with Dividend Aristocrats, which is a company that has, not only paid, but increased their dividend for 25 consecutive years. A dividend king is exactly that, but 50 years of dividend payments. And Canadian Utilities is the cream of the crop. They're right at the top of the list there in terms of Canada. And what that tells us, when a company is able to sustain a dividend for that long through the different economic periods, through the rough patches in the market, that just shows the overall strength of a company and how well they're able to make money. You take Canadian Utilities as an example. They're a regulated utility player here in Canada. About 85%, actually it's a little bit higher, I'll pop up the exact number, 90% of their earnings are regulated and so reliable, hence why they're able to reward the shareholders with an amazing stream of income, again, currently up at 4.33%. Moving on to stock number 2, again, we're keeping this one quick today, but it is General Mills, our company over in the States. And with General Mills, we're looking at a dividend of 3.75, so not as high, but still a all-around great dividend. General Mills is doing this one with a 54% payout ratio. So again, right in that sweet spot, let's call it, half of their earnings they're paying out in dividends. And what I love about a name like General Mills, this is a company that everybody knows. I don't care, you could ask your grandpa, you can ask your children, everybody knows Cheerios. Everybody knows Cinnamon Toast Crunch, and now you can actually see there's a far more products than just the traditional cereal brands. Even moving into the health conscious pet foods, for example, is one that I think is a great space to be in. One of the main reasons why I like a company like General Mills in terms of their dividend and kind of just overall, this is a company that has been around for so many years, and they've proven, the history dates back, that they've been able to grow and sustain these dividends through periods of economic downturns. You actually look back at their history, these guys have been through the different wars. They've seen it all. And you do get the people that say, like, General Mills, people are being too healthy nowadays. They don't want to eat that junk. They don't want to shove a bunch of sugar into their cereals, into their breakfast, which is absolutely true. We are facing a pretty clear consumer shift in terms of the consumption habits. But as I just touched on, through the decades and decades that they've survived thus far, I have no question that the company is going to be able to adapt and maybe change their product line slightly so that they can continue to go out and sell cereals, sell out food, pet food, like I said, all sorts of stuff that is just going to keep drawing in the income and ultimately being able to spit that back out to the shareholders. So General Mills is another high quality company that I ultimately love in terms of the dividend. Number 3 is another company out of the United States. It's a company titled UTX, United Technologies. And these guys pay a dividend, actually a lower dividend, 1.91%, actually sub 2%. They are doing so with a 50% payout ratio. I'll actually address their dividend in just a second. But United Technologies, for those not familiar, major industrial conglomerate. That's really the way that I kind of like to envision them as. And you may know them, they've got different branches or different departments of their business, but they're the company behind Otis Elevators. So largest, I believe the world's largest, if not one of the world's largest players in the elevator space. Aerospace is massive. They've just gone through some big mergers. And as well, they are the company behind Carrier, which is kind of like an HVAC, air conditioning, kind of these type of, air conditioning units and whatnot, Carrier. What's unique about this company, we'll notice here a 31-year dividend history that we're looking at. You'll notice that the yield is relatively low. And this is kind of a cool chart to look at. It talks about the yield relative to the share price. And one thing with United Technologies is that the stock is almost always going up. In fact, to pop up the share price on the screen for you guys, very, very nice trending chart. But as a stock climbs higher and higher, well, that does mean, as we know, the dividend yield, your starting yield, correspondingly does the exact opposite. And that's why in this chart, you do notice there are a couple times where the yield has popped up into that above 3% range. So you'll notice here in 2009, as well as in 2016, very few times where we actually see the dividend popping up to a really nice starting yield. And of course, that is directly corresponding with the drops in the share price. As the share price drops down, we do see these yields pick up, but there are very, very few opportunities where we've seen that over the past number of years. That said, this is still one of my top all-time favorite dividend stocks. It's just an overall quality company. And it's definitely one that I think we should all have on our watch list, because when an opportunity comes, when we see a chance where the share price drops down and we do see that dividend peep up, that is an awesome time to buy. But even at that, I do just think this is an overall quality company that you can hold. It is worth mentioning that they are undergoing a split process. The company's actually going to be they're going to be splitting up into their different divisions. They're actually going to be operating as United Technologies as their aerospace play. There's going to be Otis Elevators and then Carrier as 3 separate entities. But overall, as for now, United Technologies is, again, one of my top companies. Moving on to number 4, back to our Canadian market. It is the company Fortis, ticker FTS. And the yield on this one is 3.53%, doing so with a 49% payout ratio. So hopefully what you guys are noticing through my picks here is these are companies that are not stretching to pay out their dividends. We're not seeing 100% of their earnings being paid out. These are companies that for many years have been paying out their dividends, and they're really in that sweet spot where they have the income coming in and they're able to pay out a reasonable amount, a sustainable amount, hence why these are some of the best dividend payers out there. But Fortis as well is a company, actually 46 years, very close up to Canadian Utilities, another one of Canada's premier dividend payers. In fact, over 4 decades of dividends have been paid out and increasing them quite well over the years. One of the main things that this company kind of preaches for, one of the main things that they're targeting for is that dividend growth. It's something that they share on their quarterly reports, their annual reports. They know that Fortis shareholders, again, being a utility company, which is what they are, people holding this are not so much in it for the growth. That's always a bonus, but they really want to rely on that regular income, that reliable source of income through dividends. And Fortis is just an amazing overall name at doing so. Moving on to our 5th and final stock for today's video, another Canadian stock. It's the company Power Corp. And again, another company that does fly under the radar. I do get a lot of questions saying, or a lot of comments saying, hey, I've never heard of Power Corp before, but it's a really interesting one for sure. Dividend on this guy is 4.84%. Payout ratio is up at 60%. Now, to me, that is still something very, very sustainable. I know it's a bit higher than the previous ones we looked at, but to me, anywhere, each company's different, each industry is different, but as long as we're not up in the 70, no, even 70 is fine, 80, 90% range, a 60% is just, that's still gravy. And Power Corp is a company, weird structure. They're actually the parent company. This is a company that gives you great exposure into the financial sector here in Canada. Great-West Life is a company under their umbrella, which is obviously one of the major players, insurance players here in Canada. One of the ones that we have talked about before was their acquisition, at least a major stake in Wealthsimple, which is one of the platforms that we do cover on the channel here. I think it's an awesome option for people that are just starting out. But in terms of Power Corp, why they're able to sustain such great dividends, let's not forget that the way this company operates, when you're huge in the financial services space, in the asset management space, in insurance, this is a company that just pulls in a ton of revenue in fees, account fees, service charges, these recurring subscription or monthly annual fees that they can rely on. That is a business model that just translates perfectly into being able to pay out, first of all, receive revenue, receive income, and then distribute that back out as income. That's why this one to me is without a doubt at the top of the list. Does fly under the radar, but if you're someone that's looking for some financial exposure in kind of a unique way, this company does kind of have their hands all over the place, places that many people don't actually know. But those are 5 of my picks for today's video. 5 dividend stocks that I believe quality-wise of the company, these are the types of companies that you can aim for the next number of years, for the next number of decades, or let's call it forever. And hopefully you're seeing by the tier of these companies, their payout ratios, their payout dividend payout history, and just the overall brand name and the types of companies. Hopefully that's kind of showing you the types of companies I look for. Not out chasing the high flyers, not out chasing the returns. In fact, these are kind of boring old companies in these older, more mature sectors. Hopefully by sharing with these picks with you guys, you can kind of replicate that and kind of try to emulate that and take a look at some of the options out there and find some great dividend stocks for you guys to hold to. If you enjoyed today's video, feel free to give this one a thumbs up. That is a great way of supporting the channel. If you are new, like I said, subscribe to the channel as well. It's getting late. If you are a beginner to the stock market and you're looking for some additional help, if you want help kind of going through the process of getting your portfolio set up, getting your account set up, literally click by click, we're helping our students do that. You can learn more about that through our Investing Academy. That'll be that first link down in the description below. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.